buckle up, because we're diving deep into one of the most critical battles unfolding in 2026. The fight for the soul of money, freedom, and ownership itself. Bitcoin isn't just digital gold anymore. It's the last stand against a centralized, tokenized future where everything you value could be tracked, fractionalized, and controlled by a handful of elites. I still see Bitcoin's explosive potential as the decentralized escape hatch from a failing fiat system. But right now, the price action feels rigged, the narrative is shifting, and the architects of global finance are positioning themselves to own it all. Let's start with the man at the center, Larry Fink, CEO of BlackRock, the world's largest asset manager overseeing trillions. As of early 2026, Fink has ascended to interim co-chair of the World Economic Forum, WEF, stepping into the vacuum left by Klaus Schwab amid internal turmoil. The New York Times even dubbed him the new mayor of Davos. This isn't a side gig, it's a power consolidation. From this perch, Fink is championing the most ambitious financial overhaul since double-entry bookkeeping, tokenization of everything. In his 2025 chairman's letter and recent op-eds, co-authored with BlackRock CEO Rob Goldstein in The Economist, Fink declares, every stock, every bond, every fund, every asset can be tokenized. Real-world assets like real estate, bonds, equities, even infrastructure would become digital tokens on blockchain ledgers. Markets never close. Settlements happen in seconds, not days. Ownership is verifiable, fractional, and instantly tradable. Sounds efficient? Sure. But dig deeper. Fink envisions everything on one universal digital ledger, where each asset and potentially each person gets a unique identifier. This ties directly into digital IDs. Fink has hinted that investors, you and me, will have our own number and our own identification in this system. Investigative journalist Whitney Webb has been sounding the alarm for years, warning that tokenization isn't just about efficiency. It's the infrastructure for total control. In her October 2025 appearance on The Glenn Beck Show, Webb connected the dots. Fink's vision seeks to tokenize not only traditional assets but the natural world itself. Think rivers, forests, the Amazon rainforest turned into tokenized hectares, each with a unique digital ID, fractionalized for Wall Street trading, monitored by surveillance drones. It's nature's opportunity as a massive new asset class, quintupling financial assets like the pre-2008 bubble on steroids. Webb calls it predatory. The same playbook that fueled the 2008 crisis, but now wrapping the planet in programmable, trackable finance. You'll own nothing and be happy? No, these elites want to own everything, fractionalizing the commons and selling slices to the highest bidder. Tokenization paves the way for digital IDs as your lifeline, linked to wallets, transactions, and compliance. Step out of line, your access gets restricted. It's the highway to a surveillance state where AI enforces behavior through tokenized assets. Enter the Clarity Act, Digital Asset Market Clarity Act of 2025/2026, the market structure bill that could unleash institutional floods. Championed by Trump allies, including crypto czar David Sachs. It passed the House in 2025 and aimed for Senate action in January 2026. It defines digital commodities, CFTC jurisdiction, versus securities, SEC, registers exchanges, and provides clarity for DeFi, stablecoins, and tokenized assets. But it's on the brink. Coinbase CEO Brian Armstrong pulled support mid-January, calling the Senate draft materially worse than status quo. De facto bans on tokenized equities, DeFi prohibitions giving government unlimited access to finances, and restrictions on stablecoin yields. The Senate Banking Committee postponed markups amid 137 amendments, bipartisan clashes, Democrats pushing ethics rules targeting Trump ties, and industry pushback. The White House reportedly threatened to tank support unless Coinbase caves on yield deals for banks. It's chaos. Trump's bill, not Armstrong's. As of mid-January 2026, it's delayed to month's end or beyond, stalling crypto momentum and pressuring prices. This is the fight. The more permissioned and centralized the system becomes, digital IDs, tokenized everything, universal ledgers under Fink's influence, the more essential truly decentralized layer ones become. Bitcoin, Ethereum, perhaps Cardano or Solana. self-custodied, censorship-resistant, outside the walled gardens. BlackRock and the WEF aren't democratizing finance, they're hijacking it. Tokenization promises speed and access, but delivers surveillance and control. ETFs bring institutions in, but at what cost? Manipulation keeps prices suppressed while they accumulate. Legislation dangles clarity but risks entrenching banks and gatekeepers. We're in the trenches. Accumulate Bitcoin and Ethereum while you can own the keys, stay sovereign. The revolution isn't in Wall Street products. It's in decentralized protocols that can't be tokenized away.